Hello and welcome to My Finance Teacher. Weekend 20th of May 2018. This is going to be a short video, more specifically about gold miners rather than gold itself. And let's have a look at this chart. This is a weekly chart of gold at the top and GDX at the bottom. And sometimes near the end of an intermediate half-a-year cycle, near the last several weeks of that cycle, there is an indication from the miners, from the gold miners, GDX in this case, that often forecasts a nice rally in both gold and the miners. It doesn't happen every intermediate cycle, so let's have a look at this chart. In late 2015, when gold dropped from around, what was that, 1100 or so, all the way down to 1040, that was the bottom that we've seen all the way since the bear market began in 2011. So when that happened, miners didn't confirm a lower low. So they basically were horizontal all through September, October, November of 2015. So that's one example of the divergence between the gold price performance and the miners that I want to talk about. Another similar divergence happened in sort of near the middle of 2016, second quarter of 2016, when gold dropped from slightly above 1200 to sort of slightly below 1200. What actually happened to miners is they actually gained. Miners appreciated during the same period. That gives us about 19 to about 21 or so. And what is happening at the moment is we are observing something similar happening over the last several weeks. Over the last several weeks, gold dropped from a recent low of say 1300 to 1280 or so, 1290 at the moment. And at the same time, what happened to GDX is it actually appreciated. It went up from around 21 or so to about 22 at the moment. Historically, when these divergences happened, they were followed by quite nice rallies, both in gold and GDX. So if history excuse me, if history repeats, we might see quite a nice rally, and I think in this advancing phase of this next intermediate cycle we might reach finally a 1400, and similarly a nice rally in GDX. Well, I hope we can go all the way up to 30. That would be quite nice, and there is a potential we might break above the high we had in GDX in mid-2016. The reason for that is because over the last more than a year, about a year and a half, there has not been much volatility in GDX. And usually the periods of very low volatility are replaced by a period of relatively high volatility. Volume, as we see over here, is just declining, which just says that there is no interest in precious metals. Everybody who wanted to sell have already done it, and whenever the market moves, it is more likely to move to the upside, since again there is no interest in this market at the moment, and those who wanted have already moved on to other markets. So for all of those reasons, I think it might be wise to keep some percentage of your portfolio in miners. Remember, this is not investment advice. You gotta make your own analysis, make your own decisions. However, I do wish you luck in your investments. Follow my channel, subscribe, hit the like button, hit the dislike button if you don't like the content, and comment on the videos. I appreciate those, and I try to reply to as many comments as I can. Thanks for your attention.